Let's take a look at some charts on Ethereum from this week's article on Brave New Coin. So Ethereum's got a lot of issues. I don't think that's a secret, but issues are a good thing. Governance issues are a good thing. Active development is a good thing. Lots of people who care and are experimenting on a protocol is a good thing. It's going to look messy. It's not going to look perfect. Biggest issue right now is fees on Ethereum are basically at an all-time high. CryptoKitties were child's play compared to what's going on now. So if we start with the market caps, ETH is firmly just sort of floating between BTC and XRP if you believe in the XRP market cap at all. Really, if you remove XRP, it's even just floating between USDT and BTC. Kind of doing its own thing. It has clearly decoupled from BTC here strongly, as you'll see on the ETH BTC pair over the past few months, and has kind of decoupled from most other alts as well. And if we look at transactions per day and fees on those transactions on average, this kind of tells the whole story. Although transactions are at an all-time high, fees are also at an all-time high. So there's clearly some scaling issues here, mainly due to smart contract transactions. Not necessarily, sending ETH from one place to the other is super expensive at above $4 on average. But interacting with smart contracts can be, I've seen fees in the thousands. I myself have paid fees in the hundreds several times over the past couple weeks. So this is definitely going to damper on-chain growth. So I really don't expect transactions per day to necessarily shoot past the current highs because fees are just out of control right now. And it's really preventing smaller transactions from happening economically. But it's also going to prevent people from just sending transactions, period, because it's so expensive. So they're going to prefer to just wait or not send the transactions at all. But in a vacuum, this transactions picture is incredibly bullish. Price is nowhere near the 2018 all-time high, yet on-chain activity is mega mooning. Now, 20% of this is ERC20 Tether. Another large percentage of it is Uniswap, which actually surpassed Tether in the past 30 days as far as total fees accrued from transactions. So there's a lot more to this picture than just like, oh, transactions are going up. Well, it's more like smart contract fees are being utilized, smart contracts are being utilized, and the fees are really crushing everything else. But it's hard to be bearish on the coin itself when you're seeing all this activity. Even though most of the activity, let's be honest here, is Ponzi scheme adjacent at the very minimum. People are definitely in, and I'll show the Google Trends in a minute, but there are lots of new people coming into Ethereum. This is the average gas limit. Another way to look at just transaction costs and activity. Gas limits can be raised by the miners, and they were in, I think it was September, October, and I guess they were raised recently. I don't think they were raised again, so I don't really know the exact rules on how all this works for the gas limit, but it's clearly at an all-time high. And you're going to see that in prices as well, just because the real estate to send transactions gets more expensive. If you look at the inflation rate and block count per day, inflation rate's down around like 5%, more than double Bitcoin's inflation rate. There's been a lot of talk recently about auditing the total supply of Ethereum, which is difficult and nobody has really a straight answer. There was one developer who wrote up some code and was able to find an answer to that, at least a semi-answer. Vitalik Buterin also revealed that he doesn't run a full node himself, archival node, which is a bit concerning when the creator of a coin doesn't run an archival node. But at the end of the day, inflation's decreasing. There's no total max supply for Ethereum. There probably never will be. And block counts per day are at an all-time high. Even with that, pending transactions are actually way above 150K because at a certain point, when a transaction is stuck in the mempool, it just gets kicked out of the mempool because the fee that was sent was too low. So it's kind of hard to actually measure how many transactions are pending versus kicked out. You can definitely look into that and find the information, but it's just another metric to say fees are really expensive right now. If you look at active addresses and NVT, which is an inverse metric of economic utility, again, you can see active addresses basically at all-time highs, very close to all-time highs. This is a 30-day average, so it's not some daily jump and spike to 500K. This is months of moving up, creeping up here. You can just see where we were in January, around 250K. We've doubled the activity, and the chain can feel it with the fees, obviously. So that's mega bullish. NVT, like I mentioned in the Bitcoin video, it's hard to take seriously because this isn't inflation adjusted to my knowledge. You can see there's clearly an uptrend since 2017, which in a vacuum would be bearish. But I think if you account for all the off-chain activity and inflation, this NVT would look a lot different. Rising is bearish because it says the market cap is too expensive for on-chain utility. It's just hard to understand why NVT would be higher now than it was in 2018. You know, it should be equal or lower. That'd be my guess, or slightly higher. You know, it should be around that level, but it's not. If you look at hash rate and difficulty, both have increased since January this year, pretty dramatically really for ETH. There haven't necessarily been many new ASICs released, but mining profitability has increased substantially thanks to fees and price appreciation. So not only are they getting miners, but they're sucking the hash miners from ETC even by the looks of it. So miners are quite happy right now. If we look at all the ASICs, you can see how much in profit they are, especially the most efficient miners. Even the least efficient miners are in profit here. So if you have an ETH mining farm right now, you're like a pig in slop because you're making hand over fist on all these fees, on price appreciation. It kind of makes up for, you know, all these doldrums between 2018 and 2020 when price just kept dumping. If we look at Tether again for a second, so the Tether ETH is in the red, Tether Omni in the yellow transactions. You can see that sometime in 2019, Tether on ETH surpassed the predecessor, the original, the OG Omni coin, Omni chain Tether, and ERC20 Tether is basically the default now. One way to alleviate a lot of these fees would be to move Tether onto another chain, and Tether can kind of move to any chain. It's like a parasite. It can just go wherever it wants, suck the chain dry, destroy it, and then move on to the next one. You can just chain swap from one to the other. They do that in a centralized manner, but it's on EOS, it's on Tron, it's on OMG now. It's all over the place. So as fees get more and more expensive on Ethereum, you're probably going to see less ETH transactions that are Tether related. You can see here it topped off just because I don't care if I'm sending Tether from one place to another, if it's on Tron or if it's on EOS or if it's on ETH. Whatever's the cheapest is what I'm going to choose. Or if it's on Omni, it's probably cheaper to send it on Omni at this point. Average transaction sizes kind of haven't changed over the past year. Just kind of flat. No real comment on that from a bull or bear perspective. Just always interesting to look who's sending what, where, and why. And even though way more people are using ERC20 Tether, they're not necessarily sending more money consistently or a greater value of money. If anything, the Tether ETH is actually lower in the green here. The average transaction sizes are lower than Tether sent on Omni. And that could be DeFi related or just DApp related in general. Generally, DApps just bring transaction sizes down because there's more transactions and they're smaller in general. This is back to that archival full node. And this is in gigabytes, so it's almost at 5 terabytes at this point, which admittedly these days isn't a massive burden as far as hard drive space, but it's not insignificant by any means. This will continue to increase with the more dApps, with the more DeFi stuff. The issue with having a full node versus a partial node is that if you're trying to look up all the history that's ever occurred on Ethereum, you're going to need a full node for that. Or you're going to need a partial node that has bits and pieces of that specific section of the chain history. Another issue with these full nodes is the sync times. So the time to fully download all of this history takes, I think months, at least 1 month minimum was the last actual person that tried to do it that I saw the data on. We don't actually know, at least I don't actually know how many full nodes exist. There's a number in the article that says 8,000 to 9,000 nodes, but those nodes, you have no idea how many are full nodes, how many aren't full nodes. We have a pretty good idea on how many are on hosting. I think it's 60% to 70% at any given time are hosted on cloud services, including Infura, which is just a massive node provider for Ethereum. So there's a centralization issue there. If Infura goes down, what happens to ETH? There's all sorts of architectural problems that arise when you don't have a robust network of full nodes. So this is another knock for Ethereum from the Bitcoin people especially. You know, the Bitcoin full node is around 350 gigabytes, much more manageable for the average person. You know, your average person, unless they're an ETH maximalist, they're probably not going to run a full node. They're not going to attempt to run a full node on ETH. So that's not an issue until it's an issue, right? Like it's just whatever until all of a sudden all these partial nodes don't have enough history or aren't trusted, or Infura goes down and you need full nodes to actually look stuff up. So it's going to be an interesting problem going forward, years from now, definitely. And the big story in 2020 has generally just been supply and demand. So throughout 2018 to 2020, we had ICO treasuries selling, and no real person to sell them to. So there was this massive sell pressure that just brought price down. Only until recently when DeFi started to kick off, and you're seeing an equivalent or greater amount of ETH now being locked into DeFi. So supply demand, right? Like if there's more supply being sold and there's not really any demand, price goes down. If there's a bunch of supply being bought or locked up, demand goes up, price goes up. We're actually seeing less selling now than we kind of have in the past 2 years as far as the treasuries are concerned. I'd assume that most of these ICOs that needed the runway have either sold or panic sold by this point. And some of the better managed ICO projects are probably what's left. Certainly that's not all of them, but that's just my guess as to why selling has slowed a bit. Another reason selling has slowed is you can sell less Ethereum to get the same amount of money. So especially Q2, Q3, you don't have to sell as many Ethereum to get, 10 grand, right? This Q1 2020 number was the Digex DAO, the biggest treasury at that time, redistributed its ETH to the token holders. So that's why this value looks so large. I think that was 550K ETH. So all in all, selling from treasuries is way down, which helps price dramatically. If we start talking about dApps, bunch of dApps here, bunch of numbers. Most of these are DeFi. Most of these are yield farming, leverage, lending, exchanges, that sort of thing. I don't know if this volume is to be believed. This is a 30-day period. Certainly possible. I just haven't dug into it deeply other than looking at what it says on dApp Radar. But all this activity on chain is bullish and why fees are as high as they are. If we look at ETH locked in DeFi, another cautious value that is double counted potentially in many places just because of how the yield farming works and lending and sending ETH to one place, locking it up, and then sending it to another. So it has the value of 4.5 million ETH. It's probably not that high. It's probably half that or a little more than half. But this is the value from DeFi Pulse. Certainly incredibly bullish. Now, if we talk about Google Trends, this is Google Trends for ETH. You can see it's perked up to 2-year highs. Bullish. If we look at Google Trends for DeFi crypto, just all-time highs. This kind of tells the whole story with price. And this is yield farming, specifically crypto. Yield farming is kind of a common phrase in general farming, but if you narrow it down based on the hits of this over time, I'm pretty convinced that this is just crypto yield farming. So that's also at an all-time high. So obviously a lot of people entering the market. All right, let's talk about technicals. Bitfinex long shorts, VPVR, yearly pivots, 50-200 EMA, volume RSI. We had a pretty big, not big, decently sized bearish divergence going into a yearly pivot here. Not something you want to see if you're expecting continuation. You can see we've pulled back to around $400 today. Plenty of support on the way down at the 50, at the yearly pivot, at the 200, at this VPVR zone. So whatever this is, I mentioned in the article, 275 or something. Tons of support there. Previous high. So I don't think this is going to mean revert to the 200 in the moment. I think it's going to at least relax at 370 or higher and figure out what it's going to do. Longs on Bitfinex just keep increasing. They're sitting at 750 million notional, 750 million. The reason that's important is because if all these longs start to close or slowly start to close, that will usually indicate a top in price just because the selling pressure is so great. Now you can see that they opened up most of them at around 250. So we would have to dramatically go much lower than 250 for any of these longs to get scared as far as closing. You know, this looks like a short squeeze or a long squeeze in the making, but they're so in profit at this point that price would have to basically make new lows for them to be concerned, I think. Here's a pitchfork. It is a trend channel with specific rules. It's got anchor points here, here, and here. Price is going to want to return to this yellow line as much as it can. This is the median mean of the trend. So up until a few weeks ago, this wasn't exactly a convincing pitchfork because it was fresh, and any pitchfork that's fresh is just a little less convincing. But once it starts bouncing around these levels, comes back to the median line a few times, it starts to look more real as far as these individual trend channels actually holding price. You know, there's a nice little channel here, bounced at the median here. So I think it's convincing enough at this point to take it seriously. So median line is where price is going to want to go back to if all this fails. Like if this prints a head and shoulders, which it's halfway there now, it'll want to go back to this median line. Otherwise, the top side of this pitchfork is all fair game. 630 by 2021, 750 by 2021, you know, all this stuff looks possible if it can hold on the upside of this pitchfork. Looking at the cloud loves it. You can see it was above the cloud in April. That was your Kumo breakout. And it's just been inverted head and shoulders, mega moon, a little triangular consolidation here, failed to reach that target, and now it's just sort of attempting to figure out what it's going to do on this bear div. If it's going to retrace to this Kijun, which is certainly possible at 335, something like that. But overall, this is incredibly bullish, obviously. Trend is incredibly bullish. You expect Kijun retests a few times. Sometimes you get them early in the trends. Here's your Kumo breakout, Kijun retest, and that was it until the trend was over. Sometimes you don't get a Kijun retest at all, like you didn't here in March. But if this is a multi-month, multi-week trend, like you did here for this bear trend, you get your down move, retest Kijun, down move, retest Kijun, another down move, retest Kijun, and you know eventually it consolidates typically and then reverses. It doesn't typically just break through the Kijun. That's not what usually happens. So overall, still bullish, even with a pullback today to 400. And lastly, looking at ETH BTC, quite a move on the 2-day chart here over the past few months. It was building this triangle W thing that eventually broke out. Then you had your 5200 cross, broke the yearly pivot, broke all this VPVR resistance, broke above the next yearly pivot, had a nice bear div, higher high in price, lower high in RSI. So I think eventually this goes to 05, 07. It's going to need a lot of time to relax. You know, if RSI can go back to 50, reset momentum without price tumbling down to the yearly pivot below it, that would be incredibly bullish. You know, if we can hit 50 RSI on this pivot and above this VPVR, it's fine for more upside, I think. So on-chain activity, mega hot. Hottest it's been in 2 years, mainly led by DeFi, dApps, yield farming stuff. Tons of new people coming in. Technicals are incredibly bullish. Some mean reversion is probably due. But overall, I think over the next 6 months, this is going to be quite the move to 750 by the end of the year is certainly possible.